Welcome back. You're tuned in to Bazaar Morning Call. Well, another big stock in focus on the Nifty itself will be ICICI Bank. To help us out with the quick analysis, we have Dharmesh Kant who joins us. Hi, Dharmesh. Good morning. What do you make of the numbers? Looked a little bit soft, on various parameters. But otherwise, the extension to Mr. Bakshi's tenure, that's going to be the music to the ears of a lot of bulls on that. What's your view on it at current reckoning?
Yeah, good morning, Nigel. Thank you for inviting me for the show. So numbers were more or less a muted set of our numbers by ICICI Bank. Still, it managed to grow their advances by 11.5% as compared to the other private sector peers. For the case in point, HDFC Bank was 9% kind of a growth. Even, Federal Bank came out with only 8.6% kind of advances growth. Yes Bank at 5.5%. So private sector, we are seeing that advances growth has been quite muted. And they do stand out, and because of the provisioning which related to earlier years, and RBI has directed them to make a provision for that PSL segment. Around 1,200 crores of provisioning they have to do. Because of that, the PAT was on a negative side. The difference between HDFC Bank numbers and ICICI Bank number was the other income part. So ICICI Bank reported around 3% kind of a growth on the other income, whereas HDFC Bank, the same number came at 30%. And that's the reason why the numbers of HDFC Bank on a reported basis or a PAT basis looks quite attractive. I think ICICI Bank will languish around. The stock price, not much of a reaction till Q4 numbers come around. And let's not forget 25 basis point rate cut happened in December. So much of our pass on will be happening in Q4. So my own sense is private sector players will have a tough time negotiating Q4 on the price action point because they are still stabilizing their advances growth. Until the business picks up in that space, allocation will be more towards public sector banking space, which has been reporting pretty steady set of numbers. All the 5-6 banks which have come out have reported higher teens, around 15 to 19% kind of advances growth with better asset quality. So stay cautious from investment perspective. You can still have it in your portfolio, but you will have to spend time around for getting better returns.
Okay, all right. So your preference is actually leaning towards PSU banks in the near term, and I think from there, Bank of India is the stock that you've liked. Is that correct?
Yes, Nigel. I mean, we initiated around 107, 110 rupees with our price target of 155. So which was done in Friday's trading session. The price target has been achieved. We are waiting for the fine print of the numbers. So post that we will revise it.
Okay, all right. Dharmesh, I want to ask you about the cement pack as well. I understand that your team as well, were doing various checks in various parts of the country. I think the BR market is something that, y'all have been looking at as well. Now, we had JK Cement that came out with a set of numbers. From the recent peak, I think the stock is still down 15 to around 20%. What's good about the numbers is the volume growth and their focus on increasing capacity from around 28 million tons all the way to around 40 million tons. Valuations are not cheap, but it's never been cheap. They appear to be doing the right things because the EBITDA per ton on a sequential basis has improved despite having lower realizations. Your view on the stock, and from the pack, what do you like?
Yeah, the numbers were quite decent, and volume growth is what we have seen across the board for last 2-3 months. So volume has not been a problem with cement companies. The pricing was a challenge which they were unable to take forward on a blended basis or a net of discount basis. It used to be more of a flattish kind of a pricing. This month, many companies have taken price hike, and our expectation is around 15 to 20 rupees on a blended basis per bag price hike. Pan India basis, most of the companies will be enjoying. Though JK Cement numbers were attractive in the future, as you detailed out, looks exciting about it. But valuations, I think, for mid and small cap companies, you should be a bit wary about. For cement, if you are playing it, it should be large cap plays. And there we think the market leaders in Ultra Cap and Ambuja Cement looks pretty attractive to us. Though valuations for Ultratech is far a bit tad higher than Ambuja Cement. So the top pick remains Ambuja Cement in the basket, and this quarter should pan out well from a trading perspective for all the cement companies. Maybe 15-20% kind of a stock buy gains we can see over the next 3 to 4 months.
Ambuja Cements. Got that. Well, thanks a lot, Dharmesh, for joining and giving us a quick analysis, a short but effective chat. We look forward to catching up with you soon. For the time